What's up, guys? I have to be completely honest. I do not know what prices wants to do today. I don't have a solid grasp on it. If we look at the dollar is rallying off of that zone we talked about. This is a daily fair value gap, this orange zone. So it gapped up, came up, broke structure, dipped into that zone one more time. Notice how the wick touched it, but these bodies didn't come below that low. And now we're going higher. So at least for this morning session, it looks like the dollar kind of wants to pull back. We'll see. We'll watch how it respects this fair value gap. Does it create a swing high? Does it create multiple swing highs? And then starts making higher highs. But the way the dollar, at least on like the 5-minute and the 15-minute, let's look at the hourly. And the hourly. So even this hourly down, it looks like the dollar wants to retrace. We tapped into the zone yesterday, gapped up, came down, wick, body closed higher, and now we're going higher. So the dollar looks like it kind of wants to retrace. If you look at NASDAQ, that's the Dow. If you look at NASDAQ came up into that volume imbalance on the daily chart that we talked about. Wicked above it. You can see the bodies closed right at consequent encroachment on this 1 hour. That's awesome. So it closed right at consequent encroachment. I think we might have a pretty small range day today, actually. I'm not sure. So usually when you have following big range days, the chance of small range days can be pretty likely. If you notice, big range day here, small range, big range. I'm wondering if it's going to be a small range. You can see right here, big range, small range. Every now and then you have these 1, 2, 3 in a row, but we just have to be aware that that is a possibility, that today just wants to be a small range day. And with, as I kind of said this yesterday, I've been saying this, when price moves like this, it can be kind of hard. So at least when price moved up here, notice how we consolidated. This was that small range day that I just pointed out on the daily. So this is awesome because it kind of gives us some liquidity to work with, but I'm kind of expecting another one of these just because we kind of have to build some sentiment. If you notice, we came up and then on NASDAQ at least, we just kind of melted up. And if you've watched me talk about this before, this is really annoying. It's really hard to trade. There's not really swing highs and swing lows. It's just a staircase up. So I think price today, I'm wondering if this is going to be the high of the day, actually. I think if we break this high and continue, it'll be a big range day. But I'm guessing this is probably going to be the high of the day. And we're going to kind of move around. But there's not a lot of obvious, the buy side. It's not like there's obvious highs and lows on the hourly and the 15-minute. We can look to the left. We'd have to scroll back all the way over here. It's not ideal. Let me see if that wick took out any highs. It kind of took out this swing high. So that's that swing high before the volume imbalance. See that wick when a tick over it. So I kind of like that. I like considering this like the high of the day, possibly. I think the opening range will tell us. If we start to sweep these sell sides, then we're probably going to be going down. But I don't really have a good read, so just call that out in the beginning. I kind of labeled out some London sell side here. You can see, I think we took it, we came down perfectly to the tick on ES. So I'll go over ES on the daily chart as well. ES coming in close to these highs. NASDAQ already took these highs, but ES is working its way towards them too. I think we will take them maybe next week, maybe this week. We still have 3 days left, so yeah, I guess we could if it really wants it. 4 hour and the hourly, you kind of have the same thing that I said about NASDAQ. You just have, you know, this staircase up that doesn't give us a lot of swing highs and swing lows to kind of watch price behave at. So it's kind of hard. It is hard to read at the moment. If you go to the 15-minute, we start to get some more swing highs and swing lows, some more structure. Anytime I say structure, that's what I'm talking about. So that's nice. That's how, I was able to call out this sell side. Came right down to. Then you had a little 2022 model entry pre-market right there. So definitely think this is the draw right now. I think we'll probably at least print a wick over it. And then we'll have to reassess. We'll have to see how it prints that wick. Does it give a nice big body and show us that it wants to continue going for sell side? Does it kind of wick and come back into this range? Again, how price behaves around pools of liquidity is really important. Something I really take mental note of. Again, so remember, this yellow line's the dollar, and this low right here is where we want to see if the dollar is going to make higher highs and higher lows today, and if it's going to kind of retrace at all. It could go sideways. Today might be a sideways day. Kind of been gassing up how price action is going to be better Wednesday, Thursday, Friday. So, oops. In terms of pre-market, you can see, so we had this kind of spike up here, break lower, aggressive break. You can see fair value gap, 2022 model, break lower, another fair value gap, enter there, break lower, almost all the way. Decent size retracement. Again, I think what this retracement really was just a 5-minute candle printing up. Came up, swept that little high, but we still obeyed this high. Came down. These candles broke this swing low. You can see us then respect the PD arrays, the volume imbalances. The bodies respected them. This one broke lower, came up, tapped into that up close candle, broke lower, tapped into that up close candle, broke lower, finally coming down and just touching that. So, going to wait and see. We had the PPI at 8:30, shows right there. See a little SMT divergence right here on ES and NASDAQ. Again, the fact that I don't know. I'm feeling an air of extra caution in this morning session, because there's not a super clear draw on liquidity. We've moved so much on yesterday's price. We have this SMT. Just want to make sure we don't end up trying to trade and seek and destroy conditions before we recognize that it's seek and destroy. But yeah, I don't think it's gonna print anything over this sell sign line anymore. Oh, I just noticed. That's a little scary. Um, NASDAQ printing this big down close candle while ES was printing up close candles. But if you notice that SMT happened, so NASDAQ never got the liquidity below this low. So watch how the candle printed a big wick below it, but then the body couldn't even break these lows. Let's see what happens next. I still think that's a little bit of a red flag though. If there's any time where NASDAQ is printing a down close candle that big and ES is printing an up close candle, the chance of like a seek and destroy decoupled market could be pretty high. Which again, you don't want to be. You do not want to be trading in. Gonna draw out the opening range gap. Straight up disappeared on the 5-minute. What the heck? Okay, I'm not sure why that's not popping up on the 5-minute, but here it is. So something I'm gonna pay attention to is the bodies of these swing highs. Definitely wouldn't trade before 10. I'm a little cautious of price. It's making me a little wary. Oh, that's why. Again, remember, whenever they talk about patience in trading, what it really is just sitting on your hands when you should. And that can be, when the market conditions aren't right. I feel like a lot of people are like, if you don't see your setup, don't take it. But that falls under the umbrella where like kind of just recognizing, and I think this is the only place that I've ever heard this for smart money concepts. It's kind of like explaining how some days are better to trade than others. And I think if you've watched the market long enough, you'll notice that some days it's really obvious and some days it's not. And kind of like seeing that enough times and finding a little bit of solace in that, the fact that, okay, like it's kind of hard to read right now, but that's fine. Like I won't trade it and it'll be easy another day. I feel like that helped a lot because patience was definitely something that, like doing nothing was something that I think I struggled with a lot in the beginning. Watching the dollar, seems this yellow line in the background is the dollar. Let's see. I'm kind of paying attention to how it behaves in regards to this high and this low. I am noting how ES is above this swing high, but NASDAQ hasn't really gotten there yet. And then notice how price just came up so smoothly right here. It didn't like make a jagged structure. So if this is the low, this is the next high. So you just have a lot of space in between these highs and lows in terms of, structure. It's making it more difficult. So it's like if you're under the assumption this is going to go higher, if you make a low, a higher high, you're going to have to make a higher low at some point, but that higher low could come like all the way down here and then go up. Notice how low NASDAQ is. NASDAQ is below these lows, but ES isn't. Yeah, today might not be the best day to trade. The markets are looking a little decoupled. What I think might happen is you might enter into some seek and destroy. And kind of what I said this at the beginning of the live stream, but I said it like right off the bat, so I don't think anybody was here to listen. When we have large range days on the daily, the chances of the next day being a small range day are high. So you can see that here. Large range day, small range day, large range day. It doesn't have to. It's not like, it's not law. As you can see right here, we had 1, 2, 3 pretty big ones in a row. But at some point, it has to kind of enter into a small consolidation just to build sentiment. You know, if we're talking in terms of the algorithm, think of the algorithm needs to generate sentiment. So if the market only moved like this, 1, 2, 3, and say it just continued those 3 candles, there would be no, everybody, it would be going in one direction. Nobody's going to be placing trades. It's not going to be an even market of buyers and sellers. So it pauses to generate sentiment, and then it moves on that liquidity. I also think in terms of like longer term projections, when you have a move and then a consolidation and then a move and a consolidation, if you start to see those moves reduce in distance, it's getting closer to its terminus. So I do think I am still targeting these highs, but we'll have to pay attention to what I just said. You know, how short do the moves get before the consolidation? And that'll kind of help us determine, you know, are these the highs that we're going to take to turn over? Is it going to be this high that we take to turn over? I do kind of think we could go for that. But in terms of, so long range days, big candles can result in a higher probability of small range days the next day and seek and destroy conditions, which I feel like that's what we're in right now, especially after making this lower low on NASDAQ, and ES didn't even make it. You can see NASDAQ on the higher time frame came up and tapped into that volume imbalance that we had mapped out a few days ago. I like how the hourly candle, I like the hourly a lot. If you notice the hourly candles, the bodies respected the consequent encroachment of that gap very nicely. But I think NASDAQ is making those lows that ES isn't, because this swing low right here, this sell side liquidity, is that red line on ES. It's lower on NASDAQ. NASDAQ ran higher, so it's going to have to retrace a little more to get to it. But if we swap over to ES, you'll see that ES, it's these lows right here. And ES, we already touched it right here, but NASDAQ didn't even come close to touching it, so it looks like it's reaching down for it again. And if you run into the situation where it's like SMT here, but now it's SMT over here, and you're like trying to call out like multiple SMT divergences, that's not an SMT. It's really just a decoupled market, and there's a chance you're in seek and destroy. Looks like the dollar wants to come up and make a new high. That makes sense. I do think if you look on the 15-minute and the 5-minute, we did throughout after yesterday's close, we took a lot of buy side. We just kept making buy side, buy side, buy side. So it makes sense that it kind of wants to take at least some sell side, but again, I'd be really weary of trading this. Nothing's really standing out. It's definitely in a consolidation right now. And what you'll notice too is I feel like when the day is going to be like this, usually the setup happens like right at the beginning around 8:30. It's like usually off of 8:30 news. And you can see the only trade that I think was even viable was this 8:30 news trade. On the 5-minute, we came up, spiked above these equal highs, closed the body lower, broke aggressively, fair value gap, entered into it. It's a 2022 model. Broke lower, entered this fair value gap, 2022, another one. Broke lower, almost came really close to this liquidity. The liquidity is these equal lows right here. Retraced up, took that high, but it kept this high intact, and I think that's really what was important. You can see we went so high, low, broke above that high, then immediately broke lower and broke this swing low. So that right there was a pretty good sign. It could get a little nerve-wracking if you make a higher high, but the fact that it made a lower low right below this immediately was good. You can see when it did that, the bodies came up and respected this volume imbalance, and then it continued to print lower, and it just touched that sell side, which if you had an order there probably wouldn't have filled you. But for smart money concepts, touching it is still considered an institutional order flow entry. See, it's kind of playing around the top of the opening range gap. I'm going to go over to NASDAQ. NASDAQ still hasn't taken that sell side. Oh, you know what it is? This low right here, when it touched that red line, so I had it on this low because they're relatively equal, but they're not perfectly equal. So if you had it on that low, that would have triggered you in. So just a little tip: if you see these two lows that are almost perfectly equal, but they're not, and you're like kind of nervous about which one do I use, just always use the lower hanging fruit objective, which is the low that's closer, because then if you placed your limit there, you would have got filled. You can see the dollar in the background right here, this yellow line. I know I don't like it either. It's not too ideal, but it's making a new high, so it's gonna make the indices kind of bend the knee and break lower. I probably won't be taking a trade this morning. There's no real draw on liquidity that I can see. Super high probability in the way that the market structure is kind of printing. I feel like I wouldn't feel confident in saying, because for example, on a normal day, if this high was broken, so we took sell side right here, if we came up and ran this high, I would not expect it to be coming down this low. And it looks like it's going to take that low. So, yeah, that's one of those things where it's like, took sell side, shifted market structure on the 5-minute as well. You can see it right here. I would have been saying it shouldn't, like, that would get me interested in entry that I would now probably be stopped out on. What really gave it away was the bodies. You can see on the 1 minute we closed bodies above it, but on the 5-minute these bodies stopped right at the top of the wicks of those candles. So remember, the bodies tell the real story. The wicks just do the damage. And that's one of the, this is an instant where you can kind of help see it. This 5 minute is an instant, really great one. This is like awesome to see. I love it when you see this on the 15 minute, because when you see this on the 15 minute, that means you're going to get a lot of lower, like 5 and 1 minute entries. It's going to like give you a lot of time to kind of spot out an entry. But when I like this market structure, when we were printing candles and then we open lower, print a really big wick, and then like print a down close candle, because that's one of those things where you can just see the wick is doing the damage, but the body tells the story of lower prices. This is, I think, one of the clearest examples of just like a turtle soup sweeping liquidity right here. And I like it when it happens on the 15 minute. You can kind of see it on that 15 minute, but I guess it did happen. Okay, now that NASDAQ took that sell side. So curious to see what happens now. So after that first sell side target, that was the next one, which we did take. And then I'd be targeting the consequent encroachment of this daily fair value gap. In hypothetical speak, I'm not going to act on that. So let's watch it, because after breaking lower like that, I would expect this fair value gap to hold price down. We might, you know, it might do it and we deliver this consequent encroachment, but again, I don't really trust what I've seen so far. So this is one of those scenarios where if we do violate it, it's just another thing where it's like, okay, no, another reason not to trade. Although now I'm looking at NASDAQ a little more. The NASDAQ highs and lows make a little more sense than ES, just because on the 5 minute, it just looks like on the 5 minute it makes a little more sense. But dollar is still rising. Dollar still going higher. Yeah, so I do I would be nervous if this fair value gap didn't deliver lower prices. But if I was in this, if I was like in this short, I would be pretty nervous. It also wasn't a fair value gap on ES, that 952 candle. Okay, so you can see here we came up to the top of it, but not only did we come up to the, we didn't fill it in perfectly. Yeah, so we filled in right there. Closed that body at consequent encroachment. Notice how this daily body came up, stopped right at the consequent encroachment of that gap. So I kind of, in yesterday's live stream, I explained how this SIBI is sell side delivery, and when the candle wicks come up, they print, they deliver it, give it a chance to deliver buy side. So then when it comes up and visits again, the gap is now, it went from this to this, and then you can see to the right here, it prints back up into that, and then it becomes that. And that is the new inefficiency. And when you map it out like that, you can see consequent encroachment. That's why it stopped right there. Yeah, so you can see we came up, closed the body above this fair value gap, but then we just came down. It's not the best price delivery today. Your stop, if you were to try and enter that short, would be up here, but I wouldn't do that just because you already reached these two obvious sell side levels. And if it really wanted to continue lower, like aggressively, it wouldn't be bouncing around in that fair value gap for so long. I do think that as long as the dollar is retracing and making these higher highs, we could kind of, in a really ugly manner, make our way lower. See, the dollar is moving a little bit. After price came up right here and printed outside of the fair value gap, printed above this high, and didn't come down and take this low, if it gets above this high, then it's just going to go higher. See how we came down right to the consequent encroachment of that wick? I'd be nervous if it came up and ticked that high, because I think that's when it would do it now, possibly. It should. Again, there's when you're in conditions like this too, the things that you see normally work in good conditions won't work. Kind of like what I was saying earlier about ES. Like when I saw ES shift structure on the 5-minute, I wouldn't expect it to come down. When it took sell side liquidity and then shifted structure on the 5-minute, I wouldn't have expected it to come back down and make a lower low. But at that time, the dollar was probably moving up, and it was just falling to the dollar. Again, yeah, so you can see it came down to the consequent encroachment of that wick. I chose that wick because that wick is the wick that made the swing low right here. It has two. This is the swing low, and it's the longest wick of this group. So that's why I would choose that wick. Always choose the longest wick. If, say, you have two right next to each other, and it might not be the swing low, but one's longer, choose the longer one. But when when the longest one is the swing low, that's usually an easy decision. So you wouldn't have gotten stopped out yet, but I'd be sweating. And I also don't think it's really I don't think it's gonna go lower, because but the dollar keeps retracing, so it could. The dollar retracing to the upside, that is. And I'd even be nervous to try and use this as an inversion right now, because the dollar seems like it's, continuing its little higher high, higher low thing. And I wouldn't want to try and go long while the dollar is going higher. I'll stay on for a few more minutes, but definitely not the whole hour. I do not plan on taking a trade in this. Remember, don't have to trade. We don't have to trade every day. Day trading is not everyday trading. I like that. I like the little saying. And then again, yeah, remember, it's not, this is not like in clear conditions. So it's one of the reasons why I just shouldn't compare yourself to others, I feel like, because yeah, you might see like somewhere, I don't know, somewhere else on YouTube, maybe somewhere on Twitter or something. Somebody might be like, "Oh, like caught this trade today," and it's just like they're the one person out of the other 1,000 that tried and failed, and nobody posts their failures, so you only see the one success, and then you compare yourself to that success, and then you feel messes with you mentally. And then there's probably, I think that's also a good thing, and just like filtering out the idiots. I don't know, not to be like too mean, but like, yeah, just, I feel like anytime somebody's telling you to not do something, at least in my experience, I felt like they were pretty well experienced in trading, and like that like built a level of trust for me. That's also, I don't know if any of you picked up on this, but there was one point, like in probably the past like few weeks, where ICT was talking about Robbins, and he was like, I already know like every single day that I'm going to trade and I'm not going to trade next year. And it's things like this. It's like he knows, because he's done it for so long, he knows the exact days around the news drivers on when he's going to trade. So, I mean, if you know that CPI is going to produce a very large range day, and after a large range day, it's often choppy consolidated price, then I can go. I mean, I still come on and look because I don't have 30 years of trading experience, but through his lens, he's like, I'm not going to go and trade the Wednesday in March 2024 because that's when, like, the day before that is a CPI print. So I feel like that gave a lot of context, like, behind him saying that. Like, I already know the exact days I'm going to and not going to trade. And it's because he has so many years, too, of experience that he knows when these conditions. Like, what I'm going to do today, when I'm going to go in my journal and I'm going to write, like, I just kind of describe the price action of that day. So then once I start building more and more and more months of journaling, I can go back and I can have like a log of, oh, I saw last year that this was how price was that year, and then or that day, and then even the day before that or the year before that, price was also the same on that day. And that's how you kind of build those. I mean, that's how he probably did it, and you should. And I'm just doing it for my own personal experience to like build that catalog of knowing the good days and the bad days of price action. Because again, I feel like I've said it a few times, but like when price action is nice, it's so easy to trade. Here's the dollar, and yeah, so when we have a drop like this, it makes sense that we're gonna retrace. I could see us retracing all the way up to kind of these up close candles. I wouldn't call it an order block right here because we have that little down close candle right there. You could call that an order block. I wouldn't really want to call it an order block though. I wouldn't want to see us retrace that much on the dollar. I'd want to see it either stop at the bottom of this candle or that body and then go lower, but it's gonna have to make a lower high. So that's what's happening at the moment. It'll probably pan out pretty nicely on the 4 hour. On the 4 hour, you'll probably start to see wherever the swing high is forming. It'll probably correspond to a pretty significant PD array in here. Or maybe if you drew a fib on that fair value gap, probably respect one of those levels. So yeah, I think what today is happening is we're just kind of retracing a little bit on the dollar, forming a swing high, and what that's going to do is it's going to make the indices look like this. So after watching this on ES, I would think that closing, especially closing a 5-minute candle above this swing high, it would have to go higher. But look at NASDAQ. NASDAQ is not even close to getting above this swing high. Yeah, they're telling two different stories, so it's probably best not to trade it. And this is kind of a deeper level reasoning as to why narrative is so important around PD arrays. You can't just, pick a PD array. You can't just pick a fair value gap or what looks like an order block, because if the narrative behind it isn't right, then that up close candle is just a candle. And that fair value gap is going to get violated. So that's why the narrative is the top priority, and that's why when I came on this morning, I was like, I don't know what's happening. Like, I think it's gonna run for the sell side, but what I'd pay attention to now, so I'm gonna log off soon, but what I would pay attention to is this swing high and this swing low, because that is what looks like is our dealing range on the 15-minute and the hourly. So the dealing range is just the high and the low, the current high and the low. So this is our last high, this is our last low. So, and the hourly, and if you look on the 15-minute, it's also true. I wouldn't get too excited about any type of price action before we leave that range, because it could, in my opinion, it could do whatever it wants. While it's inside of that. And again, what you'll see too is some really skilled people, what they'll do is they'll go down on days like this, and they'll go down to like 15-second, 5-second charts. And what they'll do is they'll just try and scalp some really small, but I don't, it's not really my cup of tea. Even if we were to try and just pick any fair value gap, I don't think there hasn't been anything that's would have constituted a silver bullet entry, really. Look, there hasn't been one fair value gap formed and entered. For NASDAQ, I don't really see one. No fair value gap. Okay, now I'm going to log off. Enjoy your day.